The tax season is fast approaching. Now is the time to review your obligations, understand your tax bill, and take the necessary steps to minimise your tax liability where possible. So, what are some of the effective tax saving strategies for your business? Hi everyone, I'm James Ginty from Elements Advisory Group, talking to you today about some of the different tax saving strategies that could help save you thousands this financial year. No, this is not a video on tax evasion, but rather what to look at in your business to legally minimise your tax liability. Use this checklist to ensure that you're not paying $1 more than what you need to. The first and most important tax saving strategy is to ensure your business structure is optimal and fit for purpose, as each business structure, whether a company, sole trader or trust, has its own tax consequences. Ensuring you have the optimal structure for your business allows you to protect assets, minimise your tax obligations, and also reduce legal and operational risks. Next is to maximise your super contribution cap. Maximising your super contribution cap of $27,500 annually will also help minimise your tax bill. As super contributions are generally taxed at a lower marginal rate, you can use the full capped amount to reduce your overall tax liability of your business. Utilising the carry forward unused concessional caps from the 2019 financial year, you can make additional contributions to your super where there are unused caps from a previous year. This allows a business owner to look back up to 5 years and make a tax-deductible contribution for all unused amounts. For example, if you haven't paid any super since the 2019 financial year, you can contribute $130,000 into super and claim it as a tax deduction. There is additional eligibility criteria to meet, so please ensure you contact your accountant prior to making any contributions. Please note the temporary full expensing of assets is set to expire on the 30th of June 2023. To take advantage of this generous tax break, you need to ensure assets are delivered and installed ready for use before 1st of July 2023 to be able to claim it as a full tax deduction in the 2023 financial year. After this tax saving strategy expires, small business owners will revert to the simplified depreciation rules for all assets acquired from 1 July 2023 onwards. This means that assets that cost more than $1,000 will need to be depreciated over the asset's effective life. This change will have a significant impact on the investment decisions by business owners, so it's important to consider these changes well before the end of the financial year. As a small business entity, any expenses you prepay that have a service period for the next 12 months can be claimed as an immediate tax deduction. Consider recurring costs such as software subscriptions or service agreements, and if the option is available, prepay them on an annual subscription before 30 June and claim them in this financial year. Reviewing your debtors and creditors on a regular basis is best practice for small businesses. However, reviewing this close to end of year may result in significant tax savings. Where you determine that there is little or no likelihood that an amount owed to you will be recovered from a debtor, you may be able to claim that amount as a tax deduction via a bad debt write-off or a provision for doubtful debts entry. Of course, where the debtor subsequently pays any amounts, they will be brought in as assessable income in the year in which it was received. Reviewing your accounts receivable ledger is essential before your accountant completes your year-end tax returns. Gearing, commonly referred to as negative or positive when referring to an individual's investment, such as rental property, can also be applied at the business level. The introduction of debt into a business can result in increased interest deductions and may be considered as part of a wider debt to equity or cost of capital strategy for a business. Whether borrowing for a commercial property, an investment portfolio, a business asset, or simply introducing some working capital into the business, a business can leverage borrowing and improve ROI and tax effectiveness. In most circumstances, insurance premiums a business owns are tax deductible. These can include income protection, where a small business would be compensated for any interruption that the business may sustain if the owner cannot work. Key person risk insurance, where the business takes out insurance on an essential person within the business, or business interruption insurance that protects for loss of income and increased cost of operating your business caused by a specific event. Some policies are capital-based and therefore not tax deductible, so discussing the tax treatment with your accountant is important. In the previous 2022-2023 federal budget, the Technology Investment Boost and Skills and Training Boost were announced. Small businesses with an aggregate turnover of less than 50 million can claim a 120% deduction for expenditure for any external training and support for digital uptakes such as portable payment devices, cybersecurity systems, or subscription to cloud-based services. However, please check our website for a full breakdown of the latest federal budget when released in May 2023 to ensure you're across the latest updates and considerations from a tax perspective. Finally, as a director and shareholder of your company, look at your remuneration strategy and what is the most tax-effective package for your specific circumstances. You may consider a combination of director salary and fees or dividends. Check out our previous video about how directors can get the most out of their business profits. As your remuneration strategy may involve reporting obligations to the ATO, such as single touch payroll, PAYG obligations and super, it's important to have a clear strategy implemented prior to 30 June to ensure your reporting obligations are met. These are just a few of the many tax saving strategies businesses can use to minimise their tax bill at the end of the financial year. If any of these strategies apply to you, we highly suggest contacting your accountant and implementing these tax saving strategies as soon as possible. Or you can contact our tax team today at admin@elementsag.com.au or call us on 07 3878 9181 to discuss your specific tax planning circumstances. Thank you for watching and good luck on your business journey.